Hey everyone, welcome back to Corporate Decoder, the place where we decode the strategies behind America's biggest companies. Today, we are diving deep into Cinemark's financial report for the second quarter of 2025, and let's just say there are some interesting moves happening in the world of movie theaters. Before we jump into the numbers, if you love getting clear, no-nonsense insights from these corporate filings, make sure you're subscribed to the channel. Also, for even more discussions and early access to our analysis, join our Discord community. The link is down in the description. This is Cinemark's quarterly report, giving us a snapshot of how they're doing financially. Think of it as the company's diary for the first 3 months of 2025. Now, let's get to the good stuff, the financial tables. These are where the real story unfolds. First up, the balance sheet. This is like a company's financial photograph. It shows what they own and what they owe at a specific point in time. Cinemark had about $931.6 million in cash at the end of June 2025. That's a pretty solid number, showing they have the money to operate and invest. Their theaters and all the stuff that goes with them are worth over $1.1 billion. This is their core business, the physical spaces where people go to watch movies. All in all, Cinemark's total assets added up to close to $4.9 billion. That's a massive operation. On the flip side, they owe about $1.2 billion in the short term, meaning things due within a year. This includes things like money owed to suppliers and short-term debt. And then there's the long-term debt, which is over $1.8 billion. So debt is a significant part of their financial structure. The total equity, which is what the owners really have after everything, is about $457 million. This is the net worth of the company. Now let's look at how they made money, the income statement. This shows their performance over a period. For the second quarter of 2025, total revenue was $945 million, and for the 6-month period, it reached $148 billion. This is a significant jump from 2024, showing a strong recovery and growth in their business. Admissions revenue, which is basically ticket sales, was $467.1 million for the quarter. That's a big chunk of their income. And concessions, a movie theater's favorite profit driver, brought in $377.7 million. That's almost as much as tickets, which is a great sign for their profitability. Despite all the costs, they managed to make $173.5 million in operating income for the quarter, a strong increase from the $82.9 million in the same period last year. Taxes are always a big factor. They paid $42.5 million in income taxes for the quarter. And after all expenses and taxes, their net income was $94.7 million for the quarter. That's a 100% increase compared to the previous year, which is fantastic. The cash flow statement tells us where the cash is actually coming from and going. It's the lifeblood of any business. For the first 6 months of 2025, Cinemark generated $156.8 million from its daily operations. This is a healthy number and shows the core business is generating cash. They spent $45.2 million on things like new equipment and theater improvements. That's important for staying competitive. And on the financing side, they used $246.3 million. This looks like a mix of paying back debt, repurchasing stock, and paying dividends to shareholders. It's a lot of cash moving around. We also have the financial breakdown for Cinemark USA, Inc., separate from the holding company. It shows a lot of the same trends with strong revenue and healthy cash positions. CUSA's total revenue for the quarter was also $940.5 million, mirroring the consolidated results. Their operating income was $174.3 million, also a big jump year over year. Looking at CUSA's income statement, it's pretty much in line with the consolidated numbers, which makes sense since it's their main operating entity. These notes are like the footnotes in a book explaining the details behind the numbers. Here they explain how they recognize revenue, like when you buy a ticket or some delicious popcorn, they recognize admissions revenue, which is ticket sales. When the movie showtime has passed, concession revenue is recognized when you actually get your snacks. This table breaks down revenue by type and by region, the US versus international. It's helpful to see where the money is coming from. The US is still their biggest market, generating $759.23 million in revenue for the quarter. Their international markets, mainly in Latin America, brought in $81.2 million. It's great they have a diversified international presence. They also provide constant currency numbers for international revenue. This helps remove the effect of changing exchange rates, giving a clearer picture of how the business is truly doing in local terms. This section is management's narrative explaining the results. They talk about how the movie industry is recovering and the factors that affect their business, like the release of big movies. Here they compared the current quarter to last year's. It's clear that business is booming compared to 2024. Attendance is up, ticket prices are up, and concession sales per person are up. It's a triple threat positively impacting their top line. For the second quarter of 2025, total revenue was $940.5 million, a significant 28.1% increase from $734.2 million in the same period last year. This strong growth is driven by a better movie slate, higher attendance driving more concession sales, and strategic price increases. Salaries and wages went up, which is expected with more business and inflation, but they're also working on efficiency. Lease expenses remained relatively stable, showing good management of their fixed costs. Utilities and other costs also rose, which is typical with higher operational activity and inflation. Looking at the first 6 months of the year, revenue hit $1.48 billion, a solid 11.5% increase over 2024. The concession revenue per patron is a key metric. It increased significantly, showing they are very good at getting you to buy that overpriced popcorn and soda. This part talks about how they manage their money, their cash flow, and their debt. They generated a good chunk of cash from operations, which is what you want to see. It's interesting they are repurchasing their own stock, which can be a sign of confidence in their future and a way to return value to shareholders. They also have convertible notes, which are like debt that can be turned into stock. This is a way they manage their long-term financing. This section is about how they ensure their financial reports are accurate and reliable. They seem to have a good handle on their internal controls. They are reporting on how they determine the value of certain assets like their interest rate swaps. This indicates they are managing financial risks carefully. It looks like several key executives, including the CEO and CFO, have adopted plans to sell some of their company's stock. This is often done for personal financial planning and doesn't necessarily mean they think the stock is going down, but it's something to keep an eye on. They mention ongoing lawsuits. This is pretty standard for large companies. Most of them seem to be routine matters, but they do highlight a class action lawsuit about beer cup labeling. They seem confident they will win these. This lists all the other documents and agreements that are part of this filing. It's like the appendix in a book. Now let's talk about what this all means. Cinemark is showing impressive financial recovery and growth in 2025. Their revenue is up across the board, both in the US and internationally. The fact that they are increasing ticket prices and concession revenue per patron while customers are still showing up in larger numbers is a testament to their strong brand and effective business strategy. They seem to be doing a great job of squeezing more value out of each customer visit. The significant increase in their stock price mentioned in relation to their convertible notes and their executive stock sales also suggests positive market sentiment. However, the substantial amount of debt remains a point of caution. While they seem to be managing it well, any significant economic downturn or unexpected major expense could put pressure on their finances. Overall, Cinemark seems to be on a strong upward trajectory. They are successfully navigating the post-pandemic recovery boosted by a solid film slate and smart pricing strategies. Their international presence also adds a layer of resilience. Alright, that's our deep dive into Cinemark's 2025 quarterly report. What are your thoughts on these numbers and what they might mean for the company's future? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate decoding. And don't forget to join our Discord for more insights. Thanks for watching, and we'll see you in the next one.